Hello, everybody. So this morning I woke up to Bitcoin being up $100 more than what it was when I went to bed. So it's a beautiful day. It's quite amazing. I know there's a short report right now. I'll cover that at the end of the video. Today's story, though, it's about the point I've been making for a while. Bitcoin, not bonds. People, in general, in the future, in my view, they will not want to own a contract based on USDs. They will want to own a contract, which is a bond. A bond is a contract. They will want to own a contract based on Bitcoin, i.e. a Bitcoin-backed bond as opposed to a USD-backed bond. So in the natural world of bonds, whenever companies issue bonds, these bonds are backed by their operations, and their operations come from revenue that they earn in dollars. Whenever nations issue bonds, these bonds are also backed by dollars, by the nation's ability to tax the citizens in order to get more dollars and repay those bonds, and also by their issuance of new debt. That's how nations do it. Now, banks issue bonds too, but the bonds issued by banks, they're backed by, well, the bank's activities. For example, mortgages, personal loans. MicroStrategy issues bonds. The bonds that are issued by MicroStrategies are backed by Bitcoin. It is backed by Bitcoin, which is this solid asset that is in fixed supply. And so to understand how this works, we have to understand the money stock. For one to understand MicroStrategy and Bitcoin, one has to understand the money stock. The money stock keeps growing forever. Why does the money stock keep growing forever? That's because the stock of money always grows, because we never, as a society, decided to stop everything we do and repay the old debts. We never decided as a society to say, hey, we're going to enter into a 50-year depression and destroy the dollar, destroy the money stock to save the dollar. We've never decided to do that. So what happens is it's never the right time to repay the old debt. So the debt is created. That debt should theoretically be destroyed when you repay the created debt, but it's not ever destroyed. It's not ever destroyed by governments, because governments ever borrow more money to repay the old debt. It's never destroyed by companies, because companies roll over their debt, and why wouldn't you? And it's not repaid by household, because households just refinance. You want to get a new kitchen or whatever, just refinance the house, refinance the credit card. It's just a code for rolling over, for creating more debt to repay the old debt. That is why the pie of dollars just ever keeps rising. And by the way, the world of hurt that the economy has been in for the past 2 years has done nothing to the M2 money stock. In fact, the M2 money stock is growing again. And as we've been dropping interest rates very slowly, granted, but it's going to grow back to its usual growth rate, which I estimate to be 15%. Some people say it's less than that. But you see, we've put the economy into a world of hurt, and we've done nothing to the money supply. We've gone nowhere back towards 2019. This is where it was in 2019. We are 6 to 7 trillion higher of USDs circulating in the US financial system. We've not deleted that 7 trillion that was created for the events of 2020. And we're just going to keep on growing and keep on growing the M2. And keep in mind, M2 is always discussed, but M2 only talks about the dollar held within the US financial system. There is a financial system outside of the USA that also uses dollars, that is considered by many to be bigger than the US financial system, and it's called the Eurodollar system, and we have no idea of the stock of dollars there. We don't know how many dollars there are, but more dollars keep ever being created because old debts are repaid via new debts. And so this supply of new dollars is going to stick on many things. Inflation, goods and services is one thing that it sticks on, but another use case, of course, for the money is long-term capital, is saving, i.e. investing, buying assets for the future. And so that new money creation goes towards assets in a major way. It doesn't just go towards stuff, right? It goes towards asset. And we have multiple assets. Now, real estate is still by a hair a little bigger than the bond market. I believe real estate over the very long term will go down and will be used mostly for its utility value, i.e. what's the value of a house? Well, probably not $5 million, right? But in many areas, they are $5 million. So that will get demonetized, I believe. Same for gold, and perhaps art to a lesser extent will likely be demonetized because there's a lot of monetization that happens. But let's focus on the bonds and the equity. Many of that new money that is issued goes towards bonds and goes towards equity. Now, when it goes towards the equity, that's what's going to happen on November 29. I mean, if the stock price stays at this level, MicroStrategy should be added to the NASDAQ. And if MicroStrategy is added to the NASDAQ, that means that a lot of the money supply, of the money stock that is flowing into the equity pie, those equities, they will have no choice but to buy MicroStrategy, because MicroStrategy will be part of one of the biggest index out there, which is the QQQ, which is the NASDAQ. So the NASDAQ 100 is what I mean here. So if it were to get included in the NASDAQ, that would be a great way for the common stock of MicroStrategy to get exposure and turn that fiat money into equity. And then one of those big equities is going to be MicroStrategy, and MicroStrategy is going to turn that equity money into Bitcoin. That's the minor way via which MicroStrategy invests in Bitcoin. The bigger way for them to invest in Bitcoin is turning the bond market capital. So new dollars are getting printed. These new dollars go into the second biggest asset, the first financial asset, which is bonds. Bonds are almost 3 times as big as equity. And those bonds, they're looking for things to invest in. They may invest in real estate. They may invest in governments. They may invest in equity. They may invest in, car loans, personal loans, whatever. But those bonds, they're looking for money to lend. They're looking for someone to borrow the money. So who do they want to borrow their money? Well, MicroStrategy offers them a bond. They issue a bond where they know if you're a lender and you want to lend your newly minted fiat, if you give it to a MicroStrategy bond, you know that MicroStrategy is going to invest that money into Bitcoin. It's going to invest that money into Bitcoin. So you get a Bitcoin-backed bond. You get a bond that is not backed by someone's ability to repay their home or a state's ability to repay its debt. You get something that is backed by code, that is backed by a fixed supply of Bitcoin. That is the magic of MicroStrategy on this one, in my view. So let's talk about Bitcoin a second. Bitcoin has no top because fiat has no bottom. So we got to compare the dollar fiat to Bitcoin in this. So if you do $1 divided by an infinitely rising numbers of dollars, what's going to happen to the value of your dollar? The value of your dollar is going to go down tremendously because you always have $1. You have $1, your dollar is just sitting there in a bill, and you divide it by infinitely rising USD, right? So $1 today is not going to be the same as $1 in the future because that fraction changes. You add 1 to 20 trillion, right? And now maybe 10 years from now, you're going to have 1 to 100 trillion. So you've lost 5x. Your fraction moved from 1 divided by $20 trillion to $1 divided by $100 trillion. So you've lost 5 times of the value in that simple example. And if you keep raising the part of a money stock, well, you don't own a fixed part of that money stock. You only own $1. It's not a fixed part of the money stock. So that's why the dollar is going down in value. Now let's do the comparison with Bitcoin. With Bitcoin, you buy 1 Bitcoin divided by 21 million. And by the way, we are almost there. We are in the asymptotic part of this curve here. We are in the flattening part of the curve now. That's why in the early days of Bitcoin, you had inflation because many Bitcoins were getting mined, right? You bought Bitcoin in 2009. You were in the early days, you had a lot of inflation. We are now in the flattening part. We are in the last 1% being mined. So one Bitcoin today in 100 years will still roughly be one Bitcoin. Granted, today you may have one Bitcoin over 19.8 million Bitcoin, and in 2041 you'll have one Bitcoin over 21 million. But how many, it's roughly flat. That's why we say one Bitcoin equals one Bitcoin. And the miners, they're going to be even more irrelevant. So if you look at the inflation of the unit compared to the total of units, look at the inflation today. So the inflation today for Bitcoin is we issue 0.84% new units of Bitcoin compared to those that are already in existence today. And in 2028, it's going to be 0.42. And in 2032, it's going to be 0.21. And in 2036, there will be only 0.1% of new Bitcoins being issued. So you're essentially very, very flat. Your Bitcoin today, if you live on a Bitcoin standard today and you look at Bitcoin, you can reasonably say my Bitcoin is losing 0.84% of my purchasing power if everything was priced in Bitcoin. So it's roughly flat. So there is the ratio, your ratio of the ownership of a network stays mostly constant. And for the point of this video, it's essentially constant because we're reaching a point where we are going to be able to say all Bitcoins have been mined. All Bitcoins that will ever be have been mined. And notice, if you're a Bitcoiner, I'm greatly simplifying this because obviously people lose their Bitcoin much quicker than any of these rates, and because of that, you're actually already in the green in inflation. But I don't want to complicate things. Let's say you own $1 now. So if you own $1, $1 right now, it's going to be worth 85 cents next year, right? And then you're going to drop another 15%. And then you're going to drop another 15%. That's what we know. That's what I think the dollar is losing every year, right? 2028, how much melting is going to happen to your dollar in 2028? Is it going to lose 20% of its value every year? How about 2032? Is it going to lose 25% of its value every year? You can see in any scenario you look at the dollar, it's nowhere nearly as appealing as the new creation of Bitcoin. We essentially create no new Bitcoin, right? But we create new dollars all the time, endless new creation and accelerating creation of new dollars. The creation of new Bitcoin is decelerating. So it's, like I said, Bitcoin has no top as long as fiat has no bottom. I think this is a very important quote from Max Kaiser, and I can't emphasize it enough. So now that we've discussed Bitcoin, let's go back to bonds. Bonds historically have mostly been dollar derivatives. They're contracts, right, with a fixed principal repayment. That's when your debt matures, you get the initial value of a contract back. If you lend $1 billion that matures in 2029, you're going to get $1 billion back in 2029. That's nominated in USD. And then you get a fixed coupon. And let me ask you this, going back to this slide, do you think the coupons are anywhere between 15 and 20% on that $1 billion that you loan? No, the coupons are a joke. They're much lower than that. So it's a guaranteed loss. But you also have another risk to bonds, which is the binary risk of bonds, which is there's a situation where they could be not repaid. Bonds, if a company goes bankrupt, you're not getting the bond repaid. You're now a creditor to the company. You now have to go to court and try to get your money back. So traditional bonds, they are backed by USD cash flows. They're backed by USD denominated assets. That's what they're backed by. And of course, if you lend to a company with a very high credit rating, you may be more likely to get your money back in case there's a problem. But you always have that binary risk. Now, how is it different with MicroStrategy and Bitcoin? Well, MicroStrategy has triggered an era of Bitcoin-backed bonds or Bitcoin treasuries, right? So the debt raised, so in the situation one, in the historical situation of a nation raising money, you raise the money and you get the money and you invest it in whatever, health services or education or whatever. What happens when MicroStrategy raises the money? When MicroStrategy raises the money, you know what they're going to invest it in. They're putting it into Bitcoin. So the money raised goes directly into Bitcoin. It doesn't go into a business venture. that has a whole bunch of risk, and it doesn't go into the government that has, there's many risks to governments. There could be mismanagement of the funds, etc., etc. But since governments can always borrow more money to repay, that's not a risk we should focus on. We should not focus on the operational risks for government. We should focus on the counterparty risk for governments. And what is the counterparty risk for government? Well, in the US, it is the government scaring the world every other year with the raising the debt ceiling issue in Congress. Right? In Congress, and you know this if you live in the US, that has been a thing for the past 15 years. Every single time every single over year, or sometimes every 4 years, there's an issue with a debt ceiling. And you have politicians who are saying, well, we are not going to raise the debt ceiling. And what do you think happens in that case? The US default on its debt. And then you have all of the news that go and tell you, oh, the US would never default on its debt, etc., etc., etc. It's just a political show. Well, it's very scary. It would be very scary if you had a CEO who said, if you had a CEO, a top management team in a conference call, who started debating and yelling at each other and saying, oh, we're not going to repay the debt unless you do this or that. It's very scary. And so to quote Elon Musk, I quote Elon Musk here, in a conference call, we'll see how risk-free it really is. Can you really say that a government bond is risk-free when every other year we get so close to the debt raising ceiling deadline, the deadline to raise the debt ceiling, and in some cases we don't succeed, and then you have government furloughs, which is what had happened under the Obama years in the early days. You may remember that. It's so scaring the world every other year. That's a major counterparty risk. What if one day you have the Senate, the Congress, and the White House who just say, okay, we're just not going to repay the debt? Right? Or just start saying, okay, we're gonna print $1 trillion platinum coins, like this. So that's why when you look at the bonds of Apple, for example, well, they borrow for less money than the government. So that's an example here. Anyways, if you buy a bond from MicroStrategy, the funds are turned into Bitcoin. They are not spent in any business venture or anything like that. And when the debt matures 5 years later, the bonds, presumably, if Bitcoin does well, which it presumably will, because notice how MicroStrategy prices always more than one Bitcoin having cycle ahead, right? The debt is issued is 2029, the next halving is 2028, so he issues after one Bitcoin cycle, okay? The bonds, presumably, those bonds will be turned into MicroStrategy common equity, presumably. And so you get some of the upside, you get access to a Bitcoin derivative, and you also get a Bitcoin-backed bonds. So any dollar that moves to the MicroStrategy case, whether it's the common equity case or the convertible debt case, if that dollar moves towards MicroStrategy, it is $1 that is staying in the either Bitcoin-backed bond ecosystem or the Bitcoin equity ecosystem. It is a dollar that is meant to stay with the Bitcoin ecosystem. And that's a very powerful idea in my view. So think about these bonds as a bondholder. Think of it as a win-win. MicroStrategy debt, it includes that principle, right? The principle is quote-unquote guaranteed, right? It's quote-unquote guaranteed. The face value, you're going to get it repaid unless, of course, there is a bankruptcy type event. But the same is true for governments, right? If you lend to the government, if there's a bankruptcy type event, well, we consider it risk-free, but there could be a bankruptcy type event, right? But in theory, you have a principle that is guaranteed by the contract. The contract says that you're going to get your principal back. And on top of that, it includes built-in upside in the 55% upside conversion. So this is an example of the latest bond that it issued. It was 0% convertible bond. And with that, you had a 55% upside conversion in the premium. So here's another way to think about it. And this is why this is a win-win. So bondholders, when they buy a MicroStrategy convertible bond, they get floor protection. They get the quote-unquote principal guarantee. They get that floor protection where the face value of the bond will be repaid in 2029. unless, of course, Bitcoin goes up and they decide to convert. They decide to exercise the convertible debt and take ownership of the equity, right? So, and not this one, but in the case of most convertible bonds, in order for that floor, in order for that protection, in order for that principal guarantee, how do you pay for it? Well, you pay for it via receiving very low coupons, and in that case of that one, that's 0%, but for many other coupons that are 0.5% coupon. So you pay for that floor protection via A, low coupons, and via B, having a truncated Bitcoin exposure. You have limited exposure to Bitcoin, right? So if Bitcoin goes up 30% a year every year until 2029, you're not getting a triple your Bitcoin, right? You're getting only 55% exposure to the upside. So you get limited upside in exchange for a principal warranty. So that's why it's called a win-win. That's why I call it a win-win, and that's why all of these bonds, by the way, are oversubscribed, because you have this principal, quote unquote, guarantee, and you also get some upside. So it's a win-win. And of course, if Bitcoin to zero, it will be a total loss for all bondholders. But you would assume that anybody who buys a Bitcoin convertible debt believes in Bitcoin. That's the only reason why you would buy the Bitcoin convertible debt, because you believe in Bitcoin. That is why you would buy it. And that bankruptcy risk, that binary risk of bankruptcy, is true of every single bond. Okay, so let's talk about that binary risk, right? That sometimes people criticize MicroStrategy for having that binary risk. Well, where would you want to ever put your money as a bondholder? So you want to put it in the U.S. government? Well, we already discussed this. If you put it in the U.S. government, you have the issue of Congress every other year saying, hey, we're not going to pay back the debt, right? So maybe you don't find that scary. Maybe you trust that politicians will always do the right thing. Maybe you don't, right? So that's point number one. But conventional finance tells you that you have to trust that they will always do the right thing. That's conventional finance. That's not first principles finance. If you do first principles thinking on your finance, you realize that politicians not repaying the debt because they had to go to war somewhere sometime, that's the story of the world. So anyways, and then you could be like, okay, well, I don't want to invest in government debt. I'd rather invest in company debt. So what do you want to invest in? Well, one of the largest issuer of bonds historically has been AT&T, right? AT&T, a historic bond issuer, right? AT&T bonds are safe, right? They're totally safe. It's not like you have Starlink, who could be cheaper, faster, and more reliable. And it's not like it could come, 2 years or 3 years from now. It's not like you could imagine a world where every single home has satellite internet and it's cheaper, faster, and reliable, right? So it's perfectly safe to own a long-term bond with AT&T. Okay, I've already discussed the government debt. I've already discussed that. No financial advice, by the way. I hope you heard I was making a joke here. Anyways, another way to think about it is you're a bond investor, right? So biggest financial market in the world, and the question is, where do you want your borrower to put that cash in for you? Do you want your borrower to put that cash into Bitcoin, or do you want your borrower to put that cash into something else? So you're in the bond market. You're a bond investor, biggest market in the world. You work for, I don't know, a big insurance company, a big hedge fund, and you have a mandate to invest, institutional investor of some kind, university, whatever, and you have a mandate to invest in bonds. What are you going to invest it in, right? So historically, these have been the options. Historically, well, you could say, okay, well, Walgreens, they're really doing well. They have a strategic plan to take over Hims and Amazon Pharmacy and Mark Cuban's Cost Plus Drugs. I really believe in the brick and mortar physical pharmacy. I'm going to help Walgreens. I'm going to buy a Walgreens bond. Or you could be like, as I said, AT&T. AT&T is bringing fiber to dozens of neighborhoods. Fiber makes a lot of sense. Satellite internet will never, ever be faster, cheaper, and more reliable than fiber. There's no way that ever happens. So I totally trust it, and I let me go buy a 30-year bond with AT&T to finance fiber in new neighborhoods. Totally worth it, right? Or you could be like, oh, I trust Hollywood. I want to finance the Hollywood next blockbuster movie. Even though, you've heard there's a few AI-generated movies here and there. You've seen them them on Twitter, but you don't believe that's a real threat, right? Or, it's 2011 and you start buying a $1.3 million taxi medallion in New York City because you don't think there's never going to be any issues, rideshare is not going to be a thing. Or you could be like, okay, I'm gonna invest in a muni bond, right? In a municipal bond. I'm gonna help that town finance a new stadium venue for the next 30 years. And of course, full well that esports, electronic sports, they're never ever gonna be a thing. Sports streaming, esports streaming, all of these apps, these Amazons, that's never going to be a thing, right? People are always going to go to stadiums to see sports. And of course, concerts in the real world are also going to be a thing. People can totally afford real world concerts, and Roblox concerts, Fortnite concerts, they're never ever going to be a thing, right? Technology is never going to disrupt a stadium, am I right? Never. That's never going to happen. So you want to invest in that stadium, very much so, right? Okay, so these are options. Or what could you do? You could invest in a portfolio of mortgage-backed securities, backed maybe by some overpriced real estate. I can think of, I don't know. I hear Vancouver, Canada is a pretty good price. So maybe you want to buy mortgages backed by real estate in Vancouver, Canada. No offense to Canada, I love Canada. I'm just saying it's very expensive real estate. Do you want to buy that? Do you want to buy the bond of someone's fifth buy, borrow, die, repeat iteration, right? Do you want to buy that? Or how about, and again, I'm not criticizing pickup trucks here either. I'm just taking an example. How about a portfolio of brand new pickup trucks from GM, right? Like GM, maybe GM Financial, maybe they lent money to finance 10,000 brand new pickup trucks. How about you buy those notes from GM Financial? How about that? Not a bad idea, right? Those pickup trucks, they're always going to be extremely valuable, right? So how about utilities? You want to buy bonds from a utility? Yeah, solar will never ever be a thing. We saw what happened to Enphase. Solar's dead. Nobody's never gonna make their own power. There's just no way. How about a nation who wants to invest in a war and send, I don't know, hundreds of billions of dollars to another country to invest in a war, right? That's not risky, right? You want to invest in that nation, right? Okay. Or how about you simply invest? Occam's razor. The simplest way is the best way. How about you simply invest in a company that turns your fiat money into Bitcoin? So simple. It's so simple, stupid almost. Right? And you get a share of that upside if there's an upside. And if there's no upside, you still get a Bitcoin-backed bond. Let's assume Bitcoin stays roughly flat. It doesn't rise 55% over the next 5 years in the example I just outlined, right? This little tweet. Let's assume the 55% conversion premium. Let's assume Bitcoin stays flat for some reason. At the end of the day, you will still have had a Bitcoin-backed loan. What's going to be the value of fiber in 10 years, right? What's going to be the value of a network of thousands of Walgreens stores in 10 years? What's going to be the value of a stadium venue in 10 years, right? Look up Pontiac Stadium, Michigan to understand what can happen when these billion-dollar structures get abandoned. So Bitcoin, it doesn't, it's not subject to all of these impairments that you could have in business. And I could have added more. I could have told you about misguided acquisitions. I could have told you about personal loans and all sorts of debt. So the strategy is so simple, but it is appealing, and that is why it is so appealing. And I'll conclude with this. I'm anticipating your questions. Oh, did you see the new short seller? On this channel, I don't cover short sellers on this channel, but I'll make an exception for this one because of Saylor. And, Saylor always welcomes short seller. And I welcome the short seller. I thank you for shorting MicroStrategy. Really appreciate it. And of course, the stock is going to be down, what is it? It was down 8% at one point. I think it's back up right now, but there's going to be more volatility because right now we're in the phase where thousands of robo articles are written around the world to get the clicks, to get the headlines, and the articles are all based on the tweet. The articles all list the tweet. And that's fine, and you can have your marketing event, and don't forget. Oftentimes, these short sellers, oftentimes they do a very short term thing. Like you can be a short seller for a matter of 2 hours or 3 hours, and collect the money in the time for the news cycle to be here. And as soon as the news cycle is updated, you can close your shorts, right? You don't have to hold it for multiple days or multiple months. So, anyways, welcome to the short seller. You add to the volatility. When you add to the volatility, you make MicroStrategy more desirable. So thank you and welcome. And short seller has their own marketing strategy. With all the news article, we have a big marketing event coming up. Earned media, like you are going to have to redefine what earned media means. Bitcoin's about to reach 100,000, 98,000. I don't know if it's going to be before New Year's Eve. Saylor thinks it's going to be before New Year's Eve. It's looking like it's going to be sooner than that, but I have no idea. I don't make any short-term thing. When Bitcoin reaches 100K, the whole world will hear about Bitcoin, just like when it reached 1,000, just like when it reached 100, just like when it reached 10,000. These numbers make headlines like you wouldn't believe. Get ready for your 60 minutes. Any country you're from, the top news reporters, they're going to cover it. Get ready for a wave of special reports. Get ready for books. Get ready for movies. Get ready for word of mouth. Bitcoin's about to have the biggest marketing event in, well, I guess it will be an 8-year period, in almost 8 years, almost 9 years. We're about to have the biggest marketing event in 8 to 9 years, because we're changing an order of magnitude. We're a 10x from 10,000. We're 2 orders of magnitude from 1,000. We're changing in orders of magnitude, and let's enjoy these headlines while they come, because the next time we'll get a similar wave of headlines. It will be when Bitcoin's at 1 million. What a beautiful day to be alive. Anyways, I can't wait. I can't wait to see what's going on with the trade. We'll see what's going on with the short seller. But this was obviously not financial advice, not investment advice, just entertainment, right? Not financial advice. Please please subscribe. Follow me on X, follow me on Patreon. Thank you for watching, and have a wonderful, wonderful day.